Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other global media, and founder of the world-acclaimed ethical sustainable investing information website Investing for the Soul. And please note my disclosure statement at the end of the podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By for June 7th, 2019. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investment information and resources. Now to this podcast, and Google any terms that are unfamiliar to you. Also, you can find a full transcript, live links, and bonus material to this podcast at this edition's podcast page located at investingforthesoul.com/podcasts. First off, I'm going to talk about two new ESG ETFs. The Vanguard Global ESG Select Stock ETF on Neste, symbol VEIGX, and the X-Trackers MSCI USA ESG Leaders Equity ETF on the New York Stock Exchange ARCA, symbol USSG. The Vanguard ETF is written up by someone I really admire and have posted works by him before. His name is John Hale of Morningstar. His insightful article was posted at Yahoo Finance. One of John's main points is that this ETF is likely to be mostly comprised of low-risk ESG companies, given that its manager, Wellington Global Stewards, manages a fund available for Europeans that has a similar risk profile. Also, for an actively managed fund, it is low cost, with an estimated annual expense ratio of only 0.55%. John likes this fund, saying that, and quoting him, the fund does have a lot going for it out of the starting gate, including low fees, a quality sub-advisor, and what appears to be well-conceived approach to ESG. I expect successful asset gathering over time. Close quote. He does have one concern, though, saying that, and quoting him again, one caveat I have about the fund is that while co-managers Mandel and Courtines have years of portfolio management experience, this fund appears to be their first serious dive into ESG investing. Close quote. The second ETF, the X-Trackers MSCI USA ESG Leaders Equity ETF, quite a mouthful. So that fund has done something remarkable for an ESG ETF, and that is in its first 2 months of trading, that is by May 29th, it attained over $1 billion in assets, according to a post titled An Impressive Start for USSG ESG ETF on the ETF Trends website. Another difference about this fund that some of you might like is that compared to other ESG ETFs, it screens out companies engaged in alcohol, weapons, gambling, and other controversial products or activities. You should realize that ESG ratings refer to company operations and almost never to a company's end products or services. Hence, tobacco, alcoholic beverage, and even weapons manufacturers can still score high on ESG factors. One other feature about this ETF, and a possible reason for its terrific asset gathering performance in its first 2 months is that it has an annual management fee of only 0.10%. Now remember though, this is a passively managed fund tracking the MSCI USA ESG Leaders Index that includes 339 stocks. Tim Nash over at Corporate Knights has another great stock showdown. He sought to find a greener energy replacement for Exxon, the giant US oil company, and found Neste, that's on the Helsinki exchange, symbol NTOIY. Quoting Tim, Neste is a Finnish oil refiner that is now redefining what an energy company looks like. Although it still earns most of its revenues from oil refining and gas stations, biofuels like renewable diesel are now the fastest growing part of its business, comprising half of its total profits. Its biofuels are made from a combination of waste sources, that is animal fat, used cooking oil, etc., and plant sources, rapeseed oil, palm oil, and so forth. Continuing quoting him, he says, "If you're looking to divest your portfolio from fossil fuels entirely, Neste may not be the company for you. But by showing the world how an oil company and gas company can successfully transition into a renewable energy powerhouse, Neste wins this week's Sustainable Stock Showdown." Unquote. Tim Nash has also done another recent stock showdown. This time, Kimberly-Clark, New York Exchange KMB, versus Cascades, TSE CAS symbol. Two companies prominent in disposable paper products. Though some of you might not like the idea of investing in such companies, you can't get away from the fact that our use of paper keeps growing despite the digital everything economy. Also, in a well-balanced all-weather portfolio, you can't be too overweight in, say, tech and financials. All industries have their ups and downs, and yes, tech has done incredibly well, but given the current concerns with privacy, tariff policies, etc., who knows what the future will be? So, yes, borrowing companies in boring traditional all-weather industries that have good ESG credentials have a place in most portfolios. So Tim gives a wonderful overview of the disposable paper products industry, its pros and cons from environmental and other viewpoints, and how both companies are really trying to do a better job on the issues he raises. Here are some quotes from his article. He says that the forestry sector in general has a checkered past with impacts on biodiversity loss, climate change, and indigenous rights. Continuing, he says, from an investment perspective, Cascades is a much smaller company than Kimberly-Clark and pays a smaller dividend. Cascades could see higher revenue growth from expansion into areas like 100% recycled food packaging, and may provide better growth over time as the anti-plastic wave picks up. Both companies have good sustainability scores, but I'll give Cascades the win for this week's Sustainable Stock Showdown, says Tim. Now, do you select investments based solely on excluding specific industries, such as weapons and tobacco companies? If so, Mazja Zandbergen, head of ESG at Swiss investment firm Robeco, argues in a post written by Joe McGrath in Expert Investor that a portfolio made up of such investments shouldn't be called sustainable. I agree with that if that's the sole basis for portfolio selection. Furthermore, if you want to screen out certain industries, that's fine, but it's also good to apply ESG criteria in selecting the balance of your investments. Incidentally, Ms. Zandbergen, like many in the ESG sustainable investment industry, argues that, and quoting her saying, quoting the article I should say, she believes that companies with low ESG scores should be encouraged to improve their behaviors through engagement. And that's what we all want, and it makes financial sense too. You might be aware of the several studies showing that companies with high ESG scores trade at a relative premium to companies with low ESG scores. However, did you know that low ESG scoring companies that prove to be on an upward trajectory in their ESG performance can make outsized stock price gains relative to high ESG performers? This in part explains why companies like Robeco often pick lower scoring ESG companies and engage with them to improve their ESG activities, and therefore able to ride the wave of that company's improved stock price. In previous podcasts, I covered the rise of Beyond Meat. Well, its stock recently traded over $100, 4 times its IPO price. Wow! To me, this whole area of vegetable meat replacement food is terrifically exciting, offering new investment possibilities, and the media is onto it too. If you haven't considered investing in this new industry, you just might want to. As is often the case, celebrities often influence public taste. Sorry for that pun. A great example of media interest in vegetable meat replacement is Tom Metcalfe's Bloomberg article titled, "James Cameron Sees Global Salvation in Plant-Based Investing." James Cameron's films have been immensely successful. Remember Avatar? Collectively, these films have grossed over $6 billion worldwide. Quoting the article, James and wife Susie Amis have increasingly focused their family office on plant-based investments, from an organic farm in New Zealand to a Canadian plant that makes protein concentrates from peas and lentils. Unquote. The article also gives some impressive US stats, saying that, and I quote, that retail sales of plant-derived meat alternatives rose by almost 25% to an almost $770 million in the 12 months ended August 2018 from a year earlier, according to a February report by Rabobank. While vegan alternatives to products such as milk, cheese, and yogurt are estimated to ring up $4.1 billion in sales. End quote. For a good review article of this trend and other players in this industry, see the Green Biz post by Shana Rappaport titled, "It's Impossible to Ignore the World of Alternative Proteins." For stocks to invest in, VegFacts.com suggests Beyond Meat, that's on Nasdaq, symbol BYND, Ingredient Incorporated on the New York Exchange, symbol INGR, Bunge Limited on the New York Exchange, symbol BG, AAK on the Stockholm Exchange at AAK, Senzagen, Stockholm, SENZA symbol, and Simris, also on the Stockholm Exchange, symbol SIMRIS. On this edition's podcast page, you can find bonus information and links on investing in this exciting new sustainable industry. Go to investingforthesoul.com/podcasts and scroll down to this edition. So these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcasts and scroll down to this edition. And be sure to click the link, the like, and subscribe buttons in iTunes or wherever you listen to this podcast. That way, not only do you have the podcast directly downloaded to your iPad or smartphone, whatever, but also you help promote ethical and sustainable investing globally, particularly clicking the like buttons. And remember, I'm here to help you grow in your investment success and investing in opportunities that reflect your personal values. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else investment related. I can't say I'll have all the answers for you, and some answers I can't give due to licensing restrictions. But where I can help, I will. Now, a big thank you for listening, and please click the share buttons to share this podcast with your friends and family. Come again. My next podcast is scheduled for June 21st. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link there for my do-it-yourself ethical sustainable investing pays tutorial. And don't forget to subscribe to my podcast using whatever app or site you get your podcasts from. Now, as I indicated earlier, I want to offer full disclosure. That means I'll mention in the show if I have any direct interest or holdings in companies or securities I'm talking about. Also, any favorable or unfavorable comments I make concerning companies or securities should not be considered investment recommendations. And furthermore, I cannot guarantee the accuracy or incur any responsibility or liability for any information herein. Please do contact me. I love to hear from you. I'm at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.